What do you want this place to be?
I want it to be number one. Not in the region, but in the world.
Dubai's real estate market is thriving. It has become the world capital of luxury housing.
Dubai, there's no tax. They just have so much money though.
It continues to see record high prices.
Dubai's property market is defying the trend.
Record-breaking highest rate per square foot.
They've been selling property. They have record numbers of sales.
Buyers are paying anything from 10 to hundreds of millions of dollars, breaking sales records month on month.
The city is now a global business hub and luxury tourist destination.
What if one of the world's hottest real estate markets suddenly starts cooling down? Not because of oversupply, not because of weak demand, but because of geopolitics. Hi, this is Indranil and welcome to the Spotlight Beyond Profession. And today's story is about Dubai's real estate market and how conflict in West Asia is quietly shaking investor confidence. In the first 2 weeks of April, Dubai real estate transactions fell by 14% year-on-year. That's 6,535 deals compared to 7,563 last year. At first glance, it looks like just a slowdown. But here's the real story. These deals were actually negotiated in March when tensions in the region were at their peak following Iran attacks on the UAE. So what we are seeing right now is not just data, it's a delayed sentiment. Here's where it gets interesting. After the temporary ceasefire, buyer inquiries have started picking up again. But conversions, they are still slow because in real estate, confidence returns faster than decisions. Buyers are watching, waiting, trying to understand, is this a dip or the beginning of something bigger? Now let's talk about pricing. Top developers, they are holding firm, but smaller developers, they are adapting. They are offering discounts, flexible payment plans, even absorbing the 4% registration fee. And in some cases, properties close to handover are being sold at 12% to 25% below peak prices. This creates a split market. Premium stays strong, but mid-tier starts bending. And this is where two types of buyers emerge. First, end users and residents in Dubai who were earlier priced out are now stepping in and closing deals quickly. Second, opportunistic investors who are waiting for deeper corrections because they believe this might just be the beginning. Interestingly, at the top end, luxury is still booming. A 439 crore ultra-luxury apartment deal in Jumeirah has already gone through another 300 plus crore deal in downtown Dubai. So while the broader market slows, ultra-wealthy buyers are still betting big. But the biggest impact is actually visible in rentals. Rental demand has dropped sharply. New lease rents have fallen dramatically from around 60,000 dirham last year to nearly 20,000 dirham now. Why? Fewer new residents, slower workforce inflow, and temporary uncertainty. Landlords are now prioritizing occupancy over premium pricing. In some cases, rents are being negotiated down by 20% to 35%. But here's the biggest question. Is Dubai heading towards a crash? According to global agencies like S&P Global Ratings, probably not. This isn't 2008. Why? Stronger regulations, long-term residency programs like the Golden Visa, and a structurally strong demand story. But if the conflict continues, a meaningful correction is definitely possible. So what are we really witnessing? Not a collapse, not a boom, but a market in transition where geopolitics is now as important as economics. If you want to understand how global events impact businesses, markets, and your future, subscribe the Spotlight Beyond Profession because beyond every headline, there is a deeper story. Thank you very much for watching and signing it off.